And I'm Dennis Neal, subbing in for Steve Malzberg. I appreciate the airtime. Welcome back for the top of the hour here, 4 o'clock, and we've got the great Peter Schiff of Euro Pacific. And Peter is a quite famous brand on Wall Street, and he joins us now to discuss one of his latest articles. Quite prolific, old Peter Schiff is, saying that inflation is everywhere to be seen and nowhere acknowledged. Welcome, Peter Schiff. How are you? Actually, we're going to get Peter for you just in a minute, guys. We're working on that. But basically, let me tell you Peter's overall arguments. You know, for many guys on Wall Street, and especially for the most bearish among them, and Peter Schiff falls in that category, inflation is the ever-present boogeyman. The threat of inflation is enough to scare a lot of people out of buying stocks. Never mind that actually stocks might tend to go up in an inflationary period. But we're always worried about two things. And first is how much prices rise. That crimps economic growth, that destroys savings for Americans. But also, even more, the Fed's worried about American impressions of inflation, about people's expectations, that those inflation expectations will become unmoored, as they say, like a boat that loses the ropes tying it off at the dock. And then they will change their behavior in advance of prices actually rising, and that itself will end up crimping the economy and hurting growth. And so it's the expectations of inflation that also are at risk here. And what Peter Schiff argues in his recent article on realclearmarkets.com is that inflation is already here and the Fed is in denial. I mean, he actually sees a conspiracy here. He actually sees that he thinks that the Feds are ignoring current data, that the government consumer price index data are, quote, highly manipulated. He actually sees almost a conspiracy and a cover-up, and which will be interesting to talk about it once we get this hookup going. Now, Peter Schiff, of course, is a lot smarter on this Wall Street stuff than I am. And Peter Schiff and I have tangled over the past, since that meltdown, somewhere around June or July 09. We had an exchange when I was anchoring on CNBC.com in which he just mopped up the floor with me in a debate. We were talking about whether there's hope or not. And I was saying that this is not the end. We're going to be okay. We were down at Dow 6,800, Dow 7,000 level. And Peter, when challenged to name one single stock, a U.S. stock, just one, that people ought to buy, he said, no, I can't name a single one. And the Dow Jones Industrial Average of 30 big stocks has proceeded to go up more than 10,000 points in that time. And Peter looks a little wrong on that score, and I look a little more right. But the thing that bothers me is that someday Peter Schiff will be right. Someday we will have another big market crack, and someday inflation could end up revving up and getting out of control into hyperinflation. We could see a repeat of what things looked like in the late 1970s and 1980, when the Fed, so worried about so much rampant inflation, ended up lifting interest rates to something like, what was it, 19%? Remember, interest rates for the 4 years or so since the meltdown, 5 years, interest rates have been held down by the Fed at about 0.25%. Think of that. Interest rates of 19%. And so that at some point, inflation could break out. Now, what inflation literally means, sorry to get too basic here, but it's an increase in money. There's too much money around. And when there's too much money around, prices can afford to rise because the money can pay those higher prices. The weird thing is that while the Fed, which before the meltdown of 2008 had, I think it was a balance sheet of, I don't know, 800 billion or something, the Fed now has a balance sheet of $4 trillion. This means the Fed has essentially issued over $3 trillion in new money to buy all of these bonds. It's buying a lot of bonds because when you create new demand to buy bonds, the price of the bonds goes up, and that means the interest rate that the bond pays is much lower. And the Fed's trying to keep those interest rates low, which is why it continues to do this, creating new money. So how is it that we could have a four-fold increase in the supply of money the Fed has created, up to $4 trillion, and yet inflation in the past year is running way less than 2%? How could this be? Well, the reason is because the money has no velocity. The money hasn't worked its way out into the economy. Banks have all kinds of cash reserves, and this is because the Feds pushed them to lift up their cash after the meltdown. And so they have this cash. They're leaving it at the Fed. The Fed is paying them interest to keep that cash stored there. And so that cash stays there at the Fed, in essence, instead of working its way into the economy. You also hear the common complaints that wages have not budged, that Americans aren't earning more. Believe it or not, though, that's actually a good thing on the inflation front, because if Americans don't have more money in their paychecks to spend and buy stuff, then it turns out that they're not going to be able to lift prices because it can't cut it. And now I believe we do have the erudite and ever acerbic Peter Schiff of Euro Pacific. Peter, I've been tap dancing as fast as I can to Phil. Thank God you are here, sir. So your latest column says inflation is everywhere to be seen and nowhere acknowledged. Make your case.
Well, first of all, I just heard you talking about the fact that if Americans aren't earning more money, they can't bid up prices. But the problem is we compete with people all around the world, and other people are making more money, and they're bidding up prices. The Fed is printing too much money. And of course, when we're not producing enough domestically, the supply of goods for sale goes down, and that puts upward pressure on price. So unfortunately, we're going to have a weak economy. We're going back to recession, but inflation is only going to accelerate.
Will you please explain to me, Peter, and I don't want to get too far in the weeds, but a recession means that business is really, really slow and no one's buying anything and economic activity is sluggish. How can prices rise up in a recession when demand is low?
Because supply can be even lower. You know, some of the worst inflations happen during economic contractions. Remember, inflation is always and everywhere a monetary phenomenon. The definition of inflation is the expansion of the money supply. So prices rise and fall as a result of that, but economic growth is not a prerequisite for inflation. If anything, a strong growing economy will help counteract the effects of inflation by adding supply to the economy. If the economy is weak and not producing a lot, then when you print money, you have an even bigger upward pressure on prices. And unfortunately, that's what we're going to get, because the U.S. economy is not that productive. Yes.
Would you concede that the outbreak of inflation has been far lower than you would have expected with a quadrupling of the money supply at the Fed, that it's been lower? Or do you instead say, no, it's super high, it's just that no one knows it?
Well, it's not as high as it would have been if we weren't able to export so much of our inflation to our trading partners. So a lot of the inflation takes place in China or other countries that sell us goods in exchange for the money that we print. So we import stuff and we export inflation. But I think inflation domestically, or prices rather, are in fact rising a lot faster than the government will acknowledge using its statistics like the CPI. I think the CPI has been designed on purpose to understate the impact of prices, or the impact that inflation has on prices. So I think consumer prices are already rising much faster than the 2% that we have year on year from April. And I think the average American knows this. When you go to the grocery store, when you pay your electric bill, when you pay your kids' tuition, when you get your health insurance bills, prices are going up a lot faster than the government claims, and most Americans can feel it in their pocketbooks.
But isn't it true, Peter, that when prices go up for, say, gasoline, for necessities like food, that it basically takes money away that we would have spent on jet skis and on movies? And so prices elsewhere don't go up because there's less money to buy those things, so that overall inflation is lower than it otherwise would be.
Well, remember, though, those jet skis are likely imported, and even if we can't afford to buy them, somebody else might. And of course, if the dollar is losing value, it's going to be more expensive to import those jet skis. But I would concede that in the very short run, if Americans have to spend all their money on food and electricity, that some of the retailers who stocked up on these products that buy will demand higher.
All right. Here's more government manipulate price index
happens. But, economic growth, inflation, then it makes it appear that is stronger than it actually is. Also, if inflation causes stock prices to go up or real estate prices to go up, people think they're richer, even though they're not, because they're measuring their wealth in smaller dollars. But the biggest incentive the government has to create inflation is to wipe out its liabilities, its debts. The government has an enormous debt. 17.5 trillion is the national debt, but it has all sorts of other liabilities. It guarantees student loans. It guarantees mortgages. It has unfunded obligations for Social Security and Medicare. It can't afford to pay, so it wants to inflate the value of their liabilities.
Now,
so that's why they do it. They also want to prop up asset bubbles. Yeah.
Yeah, I always hear this, that the Fed wants to inflate its weight out of the debt crisis. That the thought being that if the dollar was worth €1.50 10 years ago, but now the dollar is I forget out the way. But the point, the thought is that well, by manipulating the inflation, the government wants to make its growth look better. But is the government also trying to make sure that our consumer expectations of inflation stay low? Is the government actually doing a good thing? Because if they can understate inflation, we're not going to worry about inflation. We're not going to change our behavior ahead of it.
The government is more concerned about the bond buyers. The government wants the bond buyers to believe that the for inflation is subdued, so the government can keep borrowing money at practically nothing. But if bondholders demanded a larger premium to compensate them for the risk of inflation, the government couldn't afford to pay it. In fact, the only reason the Fed can continue to get away with doing quantitative easing and keeping interest rates at zero is because it's able to pretend that there's no inflation. If the Fed admitted the extent of our inflation problem, it would be forced to dramatically increase interest rates to stop the QE. And if they did that, the stock market would crash, the real estate market would crash, we'd be in a severe recession, and we'd have a financial crisis that was worse than the one we had in 2008. So they have to lie. They have to pretend there's no
already believe that's what's going to happen, don't you? Isn't that kind of the thing you just said? Is that what you're predicting?
Well, what I'm predicting is that the government is going to keep interest rates at zero. They're going to keep artificially the bubble economy until there's a dollar crisis, until we have a sovereign debt crisis, until they have no choice but to jack up interest rates, not because they want to, but because the market gives them no out. But by then, things are going to be so much worse because we waited so long to do the right thing. I just hope we don't wait too long and to completely destroy the value of the dollar, that we have hyperinflation. That would be the worst case scenario.
That sure would. But Peter, you know what? You've been issuing this clarion call and worrying about this for so long. And the roughest thing is to know when you're going to be right, because someday you probably are going to be right. We've got to wrap now. Thank you so much for being with us. Great job.
I've been right for years. Go back and look at
No, you haven't. 10,000 points in the Dow says you haven't been right. We'll be back. Thanks so much, Peter Schiff. I love you. All that and the best of Give Me 5 and more on the Steve Malzberg Show with Dennis Neal. That would be me.